Hello and welcome to Dialogue. I'm Yang Rui in Beijing. 2016 marks the third year of establishment of Shanghai Free Trade Zone, instituted by Premier Li Keqiang as a move toward financial reform in China. On Wednesday, the government announced a series of measures in the Shanghai Free Trade Zone to encourage innovation and cross-border investment. Meanwhile, the yuan's depreciation trend prompted market concern over worsening capital outflow as the currency lost over 3% of its value against the US dollar since the end of September. What progress has been achieved in the Shanghai Free Trade Zone during the past 3 years? How should we evaluate the devaluation of the RMB in recent months? What challenges is China facing as Donald Trump prepares to take office? To discuss and more, I'm very happy to be joined in the studio by He Weiwen, Senior Fellow of Chongyang Institute for Financial Studies, Renmin University of China, and Michael Garatti, Head of China Economic Policy Program, Nottingham University. But before we begin our discussion, let's look at this.
The Shanghai Free Trade Zone, a testing ground for China's economic reform, celebrates its third anniversary this year. It now covers more than 120 square kilometers in Shanghai's Pudong district, 4 times the size of the zone when it was set up in 2013. Foreign trade volume in the zone reached more than 750 billion RMB in the first 8 months of 2016, a 6.5% growth from the previous year. And to put more shine on the free trade zone, several new policies have recently been introduced by China's central bank. Qualified international employees working in the zone will be allowed to open overseas personal free trade accounts.
The new policy allows more expats and overseas Chinese who meet the threshold to open an individual free trade account. These high-skilled foreigners have a higher demand for efficient cross-border financial services, including equity investment and wealth management.
Companies in the Shanghai Free Trade Zone will be able to set up onshore, cross-border RMB capital pools and use the zone's accounts to manage yuan holdings. And the money will be granted free and full convertibility in currency swaps. Private equity funds and projects will also be able to raise capital both in the zone and overseas for cross-border investments.
Under the new rules, deposits from the country's foreign currency account and domestic account can be gathered into its yuan capital pool. The company can freely use the money at any time when needed. This will significantly reduce the company's financing costs.
There are currently 4 free trade zones, including Shanghai, and 7 new zones set up to be additional drivers of China's continuing reform.
Now, gentlemen, Prime Minister Li Keqiang has promised to improve the investment and operational investment, better investment and operational environment for foreign businesses as China continues to roll out very open policies for the overseas investors. More and more domestic companies and capitals are being encouraged to invest abroad with the Belt and Road Initiative. How do you look at the enormous policy input by the Chinese authorities?
I think the Chinese authorities have been laying equally important emphasis on both foreign direct investment inflows and outbound investment flows. And for the past couple of years, more focuses were on the outbound investment because it's growing very fast. Some more emphasis is laid on the foreign investment inflows because we want to encourage foreign direct investment in the country.
The free trade zone in Shanghai alone is expected to bring about major changes so the silver lining could appear for prospective inflow of the overseas capital. Will the FTZ in Shanghai perform that role effectively?
We hope it would. There are, of course, some positive aspects and some negative aspects. The negative aspect is that it's very difficult and challenging to set up a free trade zone in an area that has with the rest of the country. So all the things that we talked about before, renminbi settlement, transaction and so on, they work very nice in Hong Kong, where you cannot go with a suitcase to Shenzhen, or you shouldn't be able to do it anyway, and transfer in and out. But in an area which is not delimited by border, It's very difficult to track people because all these facilities for registered companies are based on the fact that the company is really registered in the area and not maybe 1 kilometer away. And so foreigners, they do look at it with interest as an opportunity, but they need clarity on the rules. And one clarity that has, maybe needs improvement is the forbidden list, the negative list so-called, which in the Shanghai trade zone was going to be very much different from the one at national level, and yet the difference has not yet emerged. So we do hope that over time there will be more and more industry that are allowed for foreigners to invest, one of which, for example, since I'm Italian, we know Chinese buy our football clubs. Maybe there is interest in people buying culture, sports and entertainment, which is forbidden at the moment in China.
What do you think of the issue of a policy ambiguity concerning negative list?
Oh yes, negative list I should think is the key for any substantive improvement or results of the Shanghai Free Trade Zone. Before the negative list, we also have PNT, that's pre-establishment national treatment. That means you can register easily and not to get pre-approval. And then you have to invest only in those sectors that are forbidden on the negative list. Apart from the list, you can do it freely. But still, the negative list is too long. And we are trying to shorten it, it's still too long. So that's the main concern for foreign companies.
Everybody is talking about policy impact that the President-elect Donald Trump is likely to introduce following the inauguration in early January next year. The U.S. President-elect has pledged to cut taxes to make big enterprises create more jobs inside the U.S. What differences are likely to emerge between the two countries' investment policies in the current environment?
There is two things that I've looked at in the last couple of weeks since the election of Trump. So one is that, of course, during the campaign, he's been very anti-China and has promised to increase tariffs for Chinese imports. Now, this is a rhetoric that is normally done when you talk to your potential electoral basis. Once you become president, you cool down, and that's what he has done already. And there are two aspects here. He is mainly trying to target U.S. companies that have outsourced their production out of the U.S. into China and not just China into any other countries. For those companies, Trump is saying, no, if you outsource and kill jobs in the U.S. to produce in China or in Vietnam, and then you take these goods and you sell them back to our American market, we will have taxes, 30–35%. And the rest he may just forget it. That's the negative news. That would affect still some Chinese company that need to prove that the renminbi, we know it's going down. There will be some people that would perceive it as dumping of product. But I'm not too worried about this. The positive news is, however, that if you recall in the inaugural speech, Trump said, our infrastructure is second to none. We know which is the country that has the best infrastructure in the world today, and it's here in China. So think of how much investment in railways, bridges, steel, overcapacity that China can now redeploy into the U.S.
We will hear contradictions between
Yes.
the two economies. On the one hand, investment is badly needed to improve infrastructure, which is expected to be none to second, according to Donald Trump, the president-elect. On the other hand, he pledges to cancel job-killing industrial restrictions, for example, those restrictions on the energy production, so that millions of high-paying jobs could be created as a result. Do you think this is likely to attract jobs from China, not only from the FTZ in Shanghai, but many other parts of China, the development zones, so that we're going to face massive evacuation of American multinationals? This guy, who is known to be unpredictable, will roll out very bold policies to punish American companies who refuse to comply with this blueprint. What do you think?
I think Donald Trump will use two different tools. The first tool is encourage tax cut in the country, so as to encourage investment in the U.S. to create jobs in the country. The other tool is negative, if you do not invest in the country, in the U.S. and invest in China, or you just don't move back from
Let me
your factory.
clarify a little bit my first question.
Yes.
I mean, the point of my first question is actually the hunger by the president-elect for Chinese investment in the infrastructure of the United States.
Yes.
And on the other hand, jobs might be outsourced back to the United States with its preferential policy, for example, tax cutting.
Of course, Donald Trump wants the investment badly for infrastructure, but I don't expect there would be a massive increase of Chinese capital into the U.S. infrastructure because there are very strict legal restrictions. The Chinese companies cannot take engineering projects in the U.S. And if you invest, you have to cooperate with a local company, factories to manufacture the equipment in the U.S. So we have to have that package solution.
What do you think of the recent efforts by the Chinese financial authorities to impose curbs and balance the money flows in and out of China?
That's a typical restriction that occurs every time we have turbulence in the FX, in the foreign exchange market. I think a year and a half ago, we were here, just here discussing that renminbi would probably depreciate by 7 to 10% within the year. In the last 2 months, minus 3%. We don't have a market turbulence yet in the Shanghai stock market, but it's a natural response to try to, in a way, reassure the Chinese investor that they are safe to keep their money here. But as we know, every time government, not the Chinese, any government puts restriction on capital flow, the investors community reacts as a signal that things are worse than they appear. And so in a way, these further encourages people to try alternative ways to move capital outside. So it's all, as usual, government intervention is always a double-edged sword because it sends a signal that even people in the capital are worried and they need to do something. In most cases, intervention should be a little bit more subtle and perhaps with less, let's say, fanfare. So only few people know about this restriction and the general public is unaware and therefore they don't run to the banks.
What do you think of the relationship, if any, between the RMB depreciation of 3% since the end of September and the effort to shore up confidence of investors and consumers due to the supply side restructuring policy, or in other words, new normal economy?
Yes, I think the depreciation of the renminbi is not a reflection of the downward pressure of the domestic economy. I think the domestic economy is moving on relatively on a stable track. The most important factor causing the depreciation of renminbi is the US dollar, too strong. And the US dollar is so strong because of two expectations. Because one expectation is that Donald Trump will do something to encourage the economy to grow. The second is the Fed is almost certain to raise federal interest rate by the end of this year. So dollar goes so strong and the renminbi on the other side of the coin moves down. And also there's a worry in the country that since there's an asset bubble in the country, so a lot of capital is moving out of the country to look for dollar assets. And that's an important aspect.
The World Internet Conference has just been wrapped up in Wuzhen, a small town in Zhejiang. Now, one of the top concerns for the overseas observers is what we call the introduction of a novel idea, the cyber sovereignty. Now, inside the FTZ of Shanghai, people have been wondering if draconian policies will be introduced to have internet management. People would have to use a VPN to log on to the overseas websites such as Facebook, Twitter. Now, what do you think of their concerns? Or what has happened in the FTZ in Shanghai?
Well, there are two concerns related to that. First of all, we have to be clear. Every country can do what they like with their internet. That's a sovereign rule. People may like it, people may not like it. If they don't like it, they can always go and live in other places. So, full sovereignty of a country on currency, on internet management. Now, the debate is interesting. Now, the debate, I think foreign companies need the services of, let's say, the Google, which is email, server, drivers, and things that really make life much easier. I am more mostly worried for the Chinese company that do not have the facility or the ability to access those services, and in some cases are superior. You know, we know very well, and we recognize that there are great IT companies in China. WeChat, for example, is a much superior product than WhatsApp, so it's Tencent to other companies. And we also know that Google is probably the best search engine and cloud system that we have around it. And so it is not just the foreign company that suffer, because we're only few here in China, but the thousands, 100,000, a million companies in China that have to live with in some cases, substandard products. So yes, management, but not to please the foreigners that complain that they cannot go on Gmail, but to help the Chinese company to look at what other competitors do and, you know, take examples, which at the moment is blinded from. They're blinded
Some would argue that the preferential policies about the internet management in the FTZ in Shanghai would be the envy of those outside the zone in terms of how to use, you know, Twitter, Facebook, to gain equal access to overseas information. That would be very useful for their for the success of their companies. But you are watching Dialogue with He Weiwen and Michele Garatti. We are discussing new realities and preferential policies in the FTZ in Shanghai and what it means for the sustainability of the Chinese economy, particularly financial reform elsewhere across the country. We'll be back in a short while. Please stay with us. Welcome back. There are 11 such free trade zones in China, and policy breakthroughs may have occurred in not only Shanghai but Shenzhen, where we see very bold financial reforms to attract, you know, brilliant, innovative entrepreneurs. But what can you tell us about Shenzhen? We are commemorating the 3rd anniversary of the FTZ in Shanghai, but what about yet another landmark experiment in Shenzhen that borders Hong Kong? In the early years of China's opening up, Shenzhen had been in the forefront of a very bold experiment with the capitalism. What's the latest?
I think Shenzhen might take over Shanghai in the financial reform, because they are more open-minded and close to Hong Kong and more closely knitted with the Hong Kong financial system. And one thing is the capital account, the capital flow might be more smooth, moving on more quickly than in Shanghai. Now, of course, the Shenzhen cannot compete with Shanghai in the manufacturing sector, but still they can do very well in the financial sector.
But I'm afraid you have underestimated the severity of financial reform, the diversity of the circumstances for any bold financial reforms. If you look at the level playing field, policy curbs have been imposed on cross-border capital flight, and that will be applied equally for both Shanghai and Shenzhen. What do you think of the adversity of such circumstances, Michele?
The negative. You know, I'm one of the people that maybe argues that financial reforms should be slowed down. Countries do open up capital accounts, do reforms, exchange rate, and all the things that we talk about, stock market, introduce fancy product derivatives only and when only the economy is stable. China needs time, it's in transition. In fact, I'm very happy that the focus into China 2025 manufacturing, because that's what China does best. China is not the best country in the world to do finance, it's the best to do manufacturing, and it's a core competence that China should not forget. A too bold step into the unknown of finance, which is, by the way, a one-way path. Once you open the gate, you don't go back, could create instability. And so there's no hurry. There's no need. We don't compete with Shenzhen. You know, people in the West, in London, in New York, in Tokyo, in the financial market, do not wake up every morning thinking if Shanghai and London, which is the best financial market, they go on with their lives. And so China should go on with what it does best.
Weiwen and Michele, a crucially important message that President Xi Jinping delivered during his current stay in South America to attend the APEC leaders meeting is China will not shut its door, will open the door even wider to welcome free riding, not only with the Belt and Road Initiative, but also AIIB, the Silk Road Fund, whatever. And that means the free trade zone, which was designed for full convertibility of RMB, will go ahead, whatever the policy restrictions. But are you optimistic that we're going to move forward anyway with the policy incentive of President Xi Jinping's keynote presentation there in South America?
I think the key term of President Xi Jinping's remarks is that China will adhere to the open policy and continue to pursue globalization at the backdrop of the strong anti-globalization trend in different parts of the world. As far as the particular issue of financial reform and financial open up, I think we have to be cautious, because it's not up to you only to decide how fast we should move on with the financial reform. It's up to very much to the external situation, the world financial market.
I think one demanding requisite, if not prerequisite, of IMF, which has decided to list RMB as one of the three major reserve currencies of the special drawing rights, is full opening up of the capital account and free convertibility. What's going on in this particular area of opening up the capital account? Or is it not a requirement for RMB and the capital account to be fully open?
I'll give you an economist's answer. On one hand, it is. On the other hand, it isn't. It is on paper and it is not in practice. Example, WTO. 15 years later, after 2001, we're still debating if Article X and Y should allow or not China to be recognized naturally as a market economy, because in 2001, when China was granted the access to WTO, China promised to meet some milestones, and now we are re-evaluating the milestone. It's the same for the SDR. By the way, SDR is a pretty much useless basket of currency that really no one has ever used in any significant quantity. So it's just a recognition that China is moving, but it has no practical implication. So whether China meets or not the condition, they're not going to take the RMB out of the basket. Or if they increase the weight from 10 to 20%, it's going to be from $30 to $40 billion, which is peanuts. Remember, in one day, currency trade $5 trillion. 1 week of currency trading is the equivalent of the GDP of the United States of 1 year. So the SDR basket, which is 300 renminbi, it's like I say, the length of a football match, 90 minutes of FX trading in the world.
Well, what do you think of the conflicting signals we have received about the RMB, which has lost 3% of its value against the US dollar since the end of September? On the other hand, quite a few months back, RMB has been listed as one of the major reserve special drawing rights. On a third front, for example, between Russia and China, you have massive oil transactions that needs to be settled with the use of RMB instead of US dollars, and Iran also promises to join the settlement of hefty business transactions with RMB instead of US dollar for geopolitical reasons or whatever. So how do you look at the conflicting signals?
I think first of all, reserve currency does not necessarily mean that it must be stable. For instance, US dollar moves up and down over years, but it should be desirably stable over medium term, not short term. So I think if we look back a few years later, renminbi should be more or less stable over the past 3 years.
Regarding the stability of the RMB, let me go back to the policy of the Central Bank of China, which argues that there should be controlled fluctuations within limited space.
Yes.
Are we still following this line?
That means daily limit, not the limit over time. So I think the renminbi, because the exchange rate formation mechanism requires two elements. First element is a market exchange real level. The second element is managed on the basis of the basket currencies weights. So they are contradictory. Now the renminbi trends reflect more or less the market value. But still, the central bank is not intervening massively. We have to wait and see. If renminbi breaks 7, there might be a possibility that the central bank will move in.
One of the major messages that President-elect Donald Trump delivered on the campaign trail to blue-collar workers in the Rust Belt, who constitute the bulk of the electorate who support him, was to put America first. And therefore, he has decided to reject TPP. People in Japan and Singapore immediately complained that China will seize the opportunity and fill in the vacuum, assuming our robust regional leadership. Do you think this is an issue of a zero-sum game? The U.S. loss would be our gain in terms of, for example, China taking over RCEP to replace TPP in what amounts to geopolitical competition in this area.
Oh, not that simple. I think, of course, the job of TPP by the President-elect Donald Trump gives some leeway and room and time for China to pursue RCEP. But we should be modest because RCEP is not led by China but by ASEAN countries. However, there's a new push for RCEP. It's good. And our target is not RCEP but FTAP, Free Trade Area, Asia Pacific. However, in this sense, if the United States is away from it, it's very difficult to pursue FTAP.
You don't think evacuation of Americans from this trade area would be good news for the Chinese to maintain stable trade and investment relationship with the rest of the RCEP member states? So what do you think, Michaela?
Well, I tell you, China has normally preferred a bilateral trade agreement with individual countries. China tries to do the same with Europe, tries to negotiate with Germany separately from Italy. Of course, it cannot be done because things are done in Brussels. Where possible, China...
Are you suggesting that a multilateral trade regime will not easily replace FTA between China and other trade partners?
They will not if there are many all overlapping. If there was one like the WTO and World Trade, fine. But if there is several regional, one includes Japan, one doesn't, one includes Vietnam, one doesn't, one includes China, and it's best to do on a bilateral basis, which is what China is very good at.
Right. So do you think more and more trade partners in ASEAN will use RMB for the settlement of a bilateral trade with the benefit of the FTA?
Not that fast. It depends on the trends of renminbi, because renminbi is experiencing a new depreciation, and countries will think about it.
And I don't know whether
depreciation of RMB is not something new. If you look at our Abenomics, the depreciation of Japanese yen. It seems the major economies are competing to let their currencies depreciate.
But they have to be very careful because international currency creates a trade deficit in most cases. That's why the US is a trade deficit. The other thing is, when we say would foreign partners be happy to pay in renminbi for trade, I always ask, do they have the renminbi? And if so, where did they get it from?
Thank you very much. Thank you very much for your participation in this discussion about the third anniversary of the FTZ in Shanghai and what it means for the financial reform elsewhere for the economy. I'll see you next time. Goodbye.